go on and talk to Aditya Agarwala about what levels to watch out for now that 21,650 is where we are trading at, below 200 EMA. Many of the index stocks have gone below 200 moving average. Too late to short though, but what levels would you start buying? And do you think the structure of the market has changed for some time or just a crack which is happening? Aditya?
Good afternoon, Ajay. Thanks for having the show. I still believe markets are still making higher high, higher lows. So till the time we start making a lower high and a lower low, I wouldn't call it a trend reversal yet. Yes, the trend can reach exhaustion level. I won't deny that, as you mentioned some time back, that we all knew that the moment Nifty hit that 22,000 mark, that correction is around the corner, because we were sitting at overbought levels, no doubt about that. On multiple time frame charts, index has indicated that it's sitting at overbought levels, and you can see a bit of correction, profit booking on the index. Talking of specific levels, Ajay, on Nifty, we are very close to the 20 DMA mark, which has been acting as a stop loss line for the Nifty from the time we started this up move. So 21,600 is something which I'm closely eyeing on. If this level is broken on the downside, then we could be in for another 100-point correction, which is 21,500, which is again a very strong support zone for the market. So at the moment, 21,600 and 21,500 are two important support levels that I'm eyeing. What is important to notice here, Ajay, is the RSI. All this time, when markets were correcting, RSI wasn't going below the 60 level. That's a sign of strength for the markets. Today is the first occasion when RSI has actually moved below the level of 60 because of the magnitude of the correction that we're seeing on the Nifty. So I'll be little cautious. I won't say that I'll square off all my long positions just yet. I will be little cautious and watch out for these two levels, 21,600 and 21,500. If these two important support levels are broken on the downside, then we could be in for maybe a bit of a longer correction on the Nifty itself.
So what are the levels? Level 1, 2, 3. Do you expect it worst case Nifty slipping to 2,000 odd, or that will be too much of a stretch? Another 500-700 point at best.
So below 21,500, yes, there is a possibility of Nifty going to levels of 20,800 as well, Ajay. I won't rule that out. And maybe we could, if 2,800 is also broken, I wouldn't be surprised if 2,500 is also tested on the market. I don't want to call it out a 1,000-point correction just going around immediately. So I don't want to panic the viewers just yet. But watch the levels, I would say. 21,500 is the crucial one. If that is broken, then yes, 2,800 is the next support level I'm playing with. And 2,800, if that's broken, 2,500 is the level I'm playing with. On the upside, clearly 21,800 is a hurdle. Till the time we cross that again on the upside, I'm not looking at going fresh, aggressive long on the market.
What are your trading ideas in this market?
So, Ajay, there are clearly pockets which are outperforming, and I believe there is a sector rotation which is happening. Look at the way IT is outperforming in trade today, and it's been some time that IT has been constantly outperforming, and then we are seeing buying on the dips. So the one stock that is on my radar is Infosys. It's a large cap IT stock which has done well for itself post numbers, went into a minor consolidation phase, and I believe it's ready for a next leg of up move. If markets have to sustain these levels, IT will have to chip in. So Infosys is a buy at current levels for a target of 1,700 on the upside with a stop loss at 1610 on the downside. The second stock recommendation is MFSL. That too is looking decent for a short up move, maybe a day trade or a 2-day trade. So at current levels, I would initiate a buy for a target of 1,010 with a stop loss at 900 on the downside.
Okay, Aditya, so those are the top recommendations coming in. We let you go on that note. Thanks so much for making time and speaking with us. But it's